When you're placing these big bets, you've basically given yourself permission to trade one idea with increased size. But, you've got to be able to pull your foot off the accelerator when that trade isn't there, and sometimes that can be a bit difficult. Refreshing the page of an exchange, and I discovered that my crypto had gone up 10,000% in the last hour.
Hello, and welcome to The Trader's Journey by Investors Underground. In this episode, I'll sit down to speak with a talented trader who found success trading stocks, options, cryptocurrencies, and futures. He began trading in 2014, but faced an account blow-up in 2016. After recovering, he faced yet again a significant account drawdown in 2022. Since then, he's gone on to accumulate 8 figures in trading profits, including a successful $1.6 million trade in NVDA just last week. Traders might recognize him from X/Twitter as Moist Mango, and Investors Underground members will recognize him from the chat. It's an honor for me to get to introduce Moist Mango. Hello, Mango. Thank you for being here and coming on today to share your trading journey with us and the audience.
Hi, Anthony. I'm happy to be here. Thanks for having me on.
It's a pleasure to get to actually talk to you after following you online for, over a year now, I believe, at this point. Thanks for being here. One question I wanted to start with, if that's okay, is to try to understand how you think about yourself as a trader currently before we go back in time and learn about how you started. So how do you think about yourself as a trader and where you find edge in the markets?
These days, I'm a trader who's secured financial independence for my family and still trades basically for the love of the game, continuing to push as hard as I can. I prioritize my time a lot differently, and I don't work anywhere near as intensely as I used to. In terms of style, I'm a multi-market, multi-time frame trader, and I have a wide range of strategies I can use. I'm fairly comfortable diving into unique situations. I feel that I've earned the right to trade the size I do, and any imposter syndrome has finally been stripped away. These days, I maintain a much higher emphasis on simplifying my trading strategy and maintaining my confidence and avoiding outsized drawdowns.
Thank you. I think that's impressive to think about how you've put in the work. I'm curious to find out how much work you put in at the beginning, what all of that looked like to you. And just to learn more about, your story. Shaking off imposter syndrome is definitely a topic that I'm hoping we can dive into a little bit. But I'd like to go back in time, if we could, to the start of your trading journey. So how did you first discover the stock market, stocks, and what were some of your goals at the beginning of your trading career? Were you looking to just become self-sufficient, or did you have plans at the start to go really big and get big P&Ls? What did that all look like for you at the start?
I first brought my first stock maybe when I was like 14, something like that, with my parents, and it doubled over the next 6 months. But I wasn't really looking to make like a huge amount of money. I just always knew that if I wanted to be financially independent, I needed to invest, and that kind of continued into like an obsession about the markets. Then when I turned 18, Dad opened an FX account, the ones with 100x leverage and all that. And I joined him in opening one, and I plugged away part-time at that while I was at college with mixed results, but always learning, improving, and a bit of beginner's luck along the way, which did delay my learning curve fairly substantially, but we got there in the end.
That's impressive. You traded at a pretty early age, and one question that I had for you is, were you sort of trading alongside with your dad or learning how to trade together?
No, not really. We'd talk about it, but mostly it was a case of just plugging away and, trying to learn what you don't know, which is pretty hard sometimes.
During that time, what were some of the resources in learning how to trade that had the most meaning for you or the most value?
That's a tough one because most of the early resources that I learned from, and I did learn from them, were relatively not that good. For example, like babypips.com, people might have heard of that one, and dailyfx.com, but they're not the best educational sites. That certainly, like, you can learn a bit from them, but nothing substantial. Then, about 2 years in, I found the Playbook by Mike Bellafiore, and that had a huge impact on me. From there, everything that I saw, I'd bring back into the structure that he sort of outlines in that book.
Okay, great. Yeah, and the playbook is one of the one of like the cornerstones I think that a trader can find, especially in the early days. I think it's really fortunate that you came across that book. What did you learn from those early trades? Do you remember what that experience was like? A positive one, a negative one, sort of a mixed feeling about trading and your abilities at that time?
Yeah, it was certainly a positive experience to open an account and then double it in 3 months. But yeah, obviously on net that wasn't a good thing. Around that time, I was trading, I guess, what could be described as like a mean reversion strategy, with the basic idea that foreign exchange mean reverts, and you only have to, be able to survive the peaks and troughs. Which I feel like a lot of retail maybe start that way, some sort of half-baked idea of mean reversion, and then you either blow up and get stubborn about it and keep trying, or eventually you find other ways through it.
How did your trading style evolve over time? Because it seems like, and correct me if I'm wrong, please, but it seems like you sort of went through stages, an evolution of how you trade and what you trade. Kind of maybe one way to characterize it would be a newbie finding some success, going through a drawdown, coming across stability once again, and then a drawdown, and then once again getting good. And some might even say, you've reached sort of an elite level based on the P&Ls that we've seen and just your overall perspective on the market. Is that a fair characterization, or how would you change that up if it's wrong?
Each level was so much harder and stressful than like you could expect, because you finally think you've made it, and then it turns out you haven't. So I spent a lot of time chopping between each sort of level of newbie, inconsistent, back to newbie, to inconsistent, to good, back to newbie, and it was pretty punishing. Usually it was drawdowns or a big loss that caused that, but sometimes it was market environment. Finally, even like more recently, say 2020, 2021, a trader with that level of experience is going to have a better crafted strategy, but they're also, they're still going to make mistakes, and a simple mistake, everyone's only one step away from acting like an idiot, and that puts you straight back to the newbie stage. There's that famous quote, only as good as your last trade, and like that just describes it perfectly.
How did you manage to maintain sort of your mental capital and your determination to continue to trade during that time period? I think a lot of traders would think about either giving up or taking time off or something like that. Did that happen? How did you stay in the game?
I'm not sure. I'm pretty stubborn, and I really enjoy the markets. And it was always sort of like towards maybe like a couple of years in, everything did make sense in hindsight. I just had failed to sort of put it together correctly in advance, or maybe whatever went wrong, I got worked out or whatever. There were, kind of, I could feel myself getting better, but it was slow and painful, and
What were some of the early lessons that you learned during that time period?
I'd love to say blowing up my FX account after 3 months had the most long-standard lessons, but I have taken plenty of fat losses since then, and I probably will in the future. That's just sort of the way I seem to operate. For example, say 2010 when I was trading FX, had the fat loss. Then when I went full time in 2014, I was trading with extremely tight risk. Then when I got a little bit better in 2015, I would start to widen the stops, and that inevitably led to the 2016 blow up, I guess. There is some validity to widening stops and things like that, but it does require real mental fortitude, and you're constantly testing your discipline as opposed to a systematic strategy. So I'd say I probably got maybe a little bit overconfident too early as well.
Throughout each of those stages, were you always trading sort of a multiple various instruments, or did you start with FX and then go to stocks and options, and cryptocurrencies eventually? What does sort of that trajectory of your trading style look like over the years?
When I sort of stopped trading FX, which was late 2012, I think it was, I knew that I didn't want to trade FX like full time, and I found stocks the most interesting by far. But at the same time, I didn't know what I wanted to do. And then, you sort of start to find some online resources, piece it together. So in 2014, I started, when I went full time, I started in a chat room, which I'm sure most people are familiar with, Tim Sykes one, and SMB Capitals as well. That was also quite valuable, but I fairly quickly graduated from Tim Sykes one, and that's when I moved to IU. But around that time, I was focused mostly on, the hyped up stocks, the cycle they go through, and just been the marijuana boom. So it was like, the perfect environment. And I wasn't like a complete newbie then either. So I was instantly profitable trading the marijuana boom. And I was also lucky enough to know that I was just getting lucky because of the environment. As I say, I did have a bit of experience. That, soon faded as I expected, but it did fade for quite a long time, and that made it quite difficult.
If you're looking for ways to take your trading to the next level, Investors Underground might have something to offer. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members also have access to the morning broadcast, where the IU moderators and members share their trade ideas for the day ahead during the pre-market session. Members have access to the midday sessions with Stan, the midweek study sessions with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Moist Mango. One of the things I wanted to talk about were your bigger trades that people might know you from. What is behind sort of those bigger types of trades? Do you plan them in advance? And how do those compare to some of the smaller trades by comparison that the P&L just sorts of adds up over time? How do you think about sort of the bigger trades versus the smaller, consistent trades?
Yeah, well, these days first and foremost, I focus on, am I trading well? Is my equity curve in the right trajectory? Things like that. And then from there, it comes down to piecing together the idea. There's a couple of big things that go into placing big bets or big wins. And the first type of big win is simply just a normal trade, and it's just ridiculously good in terms of risk reward, and you just end up holding the position the entire way. And to be honest, that happens quite a bit. Like not super often, but sometimes you'll look and go, oh crap, that was a 50R opportunity, and all I had to do was put on a little bit, and turns out it worked. And then the second type is probably the hardest type, which is a unique situation or catalyst. And that requires like on-the-fly bet sizing adjustments, which, as I say, it is hard. Best example of this is the Roaring Kitty live stream announcement. I did a trade review on Twitter because I messed it up, I'm sure you can link that one in the show notes. But that was a huge opportunity, but it did require you to, be relaxing at your desk, and then all of a sudden, wait, this is a massive opportunity. I need to react accordingly. And hey, if you don't, it just turns into a normal sized trade with good risk reward. And then the third, which is probably my favorite type of big trade, is one that you can pre plan in advance. You can mentally prepare to put the size on, you can rehearse most of the outcomes, both mentally and does it fit my playbook, intraday, daily, catalyst, all of those things. And then across those three types, obviously, can you pyramid anywhere? And if you can, is it safe? Are you going to ruin the trade? How much do you lower your probability of success in doing so? Sometimes you will almost never lower the probability of success by pyramiding, and other times you'll be a complete muppet and ruin the trade, and that's just trading.
How long did it take you to become comfortable understanding different catalysts and even being able to, maybe size into a trade or know maybe if the trade, once you're sized in, might come back and possibly, go from a green trade to a losing trade? How long did it take you to sort of hone some of those skills?
I've always enjoyed putting together like the pieces of the puzzle, if that's the way you want to think of it. So betting big kind of comes naturally to me because of that. If you put together the pieces of a puzzle and there's more than just a normal trade, there's, I don't know, 6 things in your favor instead of 3, or something like that. Then I really want to push it hard. I feel like I've put together the pieces of the puzzle, and therefore I really want to jam it as hard as I can. But probably right up until post 2022, I made a lot of mistakes around that, and my definition of like what an A plus trade is has changed substantially since then. In the past, for example, I considered like a parabolic, a unique parabolic to be like an A plus situation, whereas now I only consider it to be an A plus opportunity if certain other things align. Mostly that I can control the risk, but also like I'd rather an opportunity I can pyramid into than one I can bet big at the onset.
It would be problematic for me if I didn't bring up the recent NVIDIA trade. I remember seeing that P&L and just being really happy for you and inspired to see that sort of number come up. And so one question I had is, where does NVIDIA, that trade, which was right around 1.6 million on, was it one session or 2 sessions? How did that trade come about? Was that one of the more planned trades? And did that end up being sort of as big of a trade as you thought it could be? What was your sort of perception of that, in the moment, planning for it, and when you look back at it from a trade review standpoint?
Yeah, I mean, NVIDIA is a really good example. It has a little bit of all of those points I mentioned in it. It really started probably like months and months ago. I mean, first of all, just noticing that the semis are on a big hot run, and then noticing that NVIDIA becomes the leader, and then slowly each step along the way, it would threaten to go parabolic, but then it would pull back, and that wasn't the day. That wasn't the big opportunity. And so the further along it gets, the better the opportunity gets. And yeah, I'll get a full review of it up on my Twitter. But yeah, first step is to rate the idea, what I'd like to see, go through a bit of that mental rehearsing, and draw on my previous experience. I've traded a lot of parabolics. I've been tracking these options unwinds for about 3 years now. They were originally brought to my attention by Team 3D Stocks on Twitter, and I was vaguely aware of them beforehand due to a strategy called gamma scalping, which I'm not an expert on, so I won't really talk too much about. But I'm good with options unwinds. I'm good with parabolics. I'm familiar, not only that, but I'm familiar with parabolics across a multiple number of instruments. A mega cap parabolic is going to be completely different to a small cap one, going to be completely different to a commodities one. There's all these nuances. So that's sort of the start of it, is just knowing that you're going to be good at it. You can't, oh, this is a good idea, but I haven't traded this much before. You have to be confident that you're going to be able to make the right calls. And I'll mention my mistakes at the end, but mistakes are so much more costly when you're betting big. So you have to be confident that you're going to execute well. So yeah, the first thing is just the actual grade. To me, NVIDIA really needed one more big up day to be an A plus setup. As it is, it was probably more like an A or A minus. That one more day would have put it on the Friday, which gives even more asymmetry via the options there as well. So on the day, we're sitting there going, please go up one more day, please go up one more day. And then on Thursday, it gaps up huge. Off the Twitter AI news, whatever it was. It didn't seem like it was too significant to me, but more importantly, the gap. It was a massive gap. The only other gaps that size were similar to, they were like the earnings days. That they were bigger, obviously, because they're earnings, but suddenly it's like, okay, this is a bit different. Maybe I need to consider it. And I think for aggressive traders, it would be reasonable to start a short even pre-market there at 4 a.m. or when it sort of gets closer to that later on. But that's not really how I operate anymore. I'm more interested in joining it. So then later on, as I say, we're sitting there, please go up one more day. I just don't want to, I want the really nice trade tomorrow. And all of a sudden it takes out the pre-market lows. And we know there's a lot of air underneath. It's had what you call a character change. It's gapped up and it's taking out the pre-market lows. It's game time basically. So it's got the pre-planning, but then it's also got the adjustment on the fly that makes it slightly more difficult than if it was just the home run tomorrow on Friday. I basically shorted it as it took out the lows, and suddenly I'm looking across all the semis. MU was weak. All the other ones were weak, but AMD was on some ridiculous rally, and SMCI, which had gapped up a lot as well, it hadn't even taken out the pre-market lows. So I think I was up like 500k at the bottom on that morning dip, about 10 a.m. And NVIDIA went on what I consider to be a fairly sharp bounce, and I think I, roughly speaking, drew that 500 down to about plus 150 or something like that. And to me, that bounce basically negates it because, looking across the semis, I expect them all to unwind as NVIDIA does. This is a whole like short at the open, close at the lows, hold the short all day, get huge asymmetry. So to me, the trade idea is basically negated at that point. I'm almost hoping that NVIDIA goes back to the highs, right? I still want that Friday trade, and especially because I haven't lost any money. Like the trailing stop has essentially done the job. There's a point of indecision on NVIDIA. I don't know what's going to happen. Anyway, SMCI and AMD around about 11:30 on the day, they start to try and push to the highs, and they just get rejected pretty hard. Around the same time, NVIDIA turns from VWAP, which roughly coincides with the pre-market low, and all of a sudden, all the semis are moving together again. So it's like, okay, the game's back on. If NVIDIA stays weak, this trade is still valid. I forget what time it was exactly. About 12 o'clock, a seller showed up on NVIDIA and held it down fairly aggressively where it should be bouncing, and that was like, okay, add, doubled my size, and literally risking basically against that seller if I can. I don't necessarily expect to be able to get like a clean stop out if he pulls, but at least I've got a rough idea. If he stays there, I'll stay there if he doesn't. And then round about this time, I realized I had about 25% too much size, so I immediately pieced that out just to get down to a bit more reasonable. And as I'm sure you can imagine, if you have 25% more size of a normal size trade, like, oh well, not a big deal. that's normal, like 0.25R, right? You're not too worried. But if you have 25% more size of something you've already sized, it's a bit too much. And then, as I say, I expected it to close at the lows. I was a little bit thrown off by it happening on the Thursday, and so I didn't quite roll to the 130 puts as aggressively as I would have liked to. I did expect it to gap down, but I didn't take that trade, again thrown off by the Thursday and the rebalance on the Friday. So, as you can see, I did make some mistakes, in particular having to adjust to the Thursday aspect. But, that's just trading. It is what it is. But, I mean, an extra, like that, those 130 puts would have given me like an extra 2 to 4R. In the trade itself, I only netted like 6 to 8. So that's massive. I almost would have been better off going slightly smaller and not making those mistakes. And then I guess the other example of where the sizing can go wrong, you'll see on the Twitter post, I lost 200k on the calls that day. That loss should have been more like about 50 to 120ish, somewhere in that range. So, when you're placing these big bets, you've basically given yourself permission to trade one idea with increased size. But, you've got to be able to pull your foot off the accelerator when that trade isn't there, and sometimes that can be a bit difficult. Overall, I'll give myself maybe a B plus or an A minus for execution. As I say, I made some mistakes, but identifying the sector roll and the tape read of that seller was really, really good.
One of the things that stands out to me is it seems you were rather flexible in terms of your trade management there, and being able to sort of go between this ability to analyze what's going on across the sector and other tickers, and sort of rethinking your thesis for the trade or your conviction in the trade. Is that sort of an accurate reading on how you were thinking about it?
Yeah, I think that's fair. I would say that comes down to a couple of things. The first is just having a deep understanding of how markets work, supply-demand dynamics. I'd say maybe the second thing is having a deep playbook. I have intraday plays only, and then those intraday plays, say for example, just a really basic short at VWAP type intraday play, I can then pull that in to use from this central idea that I expect NVIDIA to close at the lows if today's the day. So I can pull on all these different methods of potential execution to fit my idea, which, we've talked about why the idea itself was so good. So then I need to find the price action itself that suits me to really, push it as I want to.
Did you ever think about just taking the profits maybe at 300K or something like that and walking? Or were you so prepared for this trade and the potential outcome, whether it was on that Thursday or, the Friday, were you so confident in the outcome that gave you some confidence to maintain the trade and stick with it?
Yeah, I mean, the first thing to realize is it's all relative, right? I was risking, say, 100 to 300k on the trade, depending on exactly where I could stop out. So, I don't think a trader who risks $100 a trade is gonna. I mean, if they're taking all their trades off at plus $300, they're probably making a mistake somewhere. So, yeah, part of it's relative. Part of it is also just, I've done the homework. I know where this can go. If I take plus 3R and leave potentially 20 on the table, I'm gonna just absolutely hate my life. I really want to. I've put together this puzzle. There's multiple variables in my favor, and if I don't crush it as I want to, then that's really gonna sting. Yeah, it also comes down to where I am in my trading as well. That's why I emphasize being at equity highs, trading well, all of those things. If you're on a drawdown, for example, you might hold it incorrectly, shooting to erase your drawdown. Whereas if you're trading well, you're trading well, it's a much easier spot to be in.
I really appreciate you explaining that, because I think it gives traders a lot to think about how they're approaching their trades, how flexible they're being, Are there other things that you were keeping in under consideration? For example, like the amount of range on a given day, that you kind of had thought about beforehand, and as those lined up, give you extra confidence? Is that stuff that you look at as well? In terms of kind of like the technicals, the range that you're seeing on a day, whether it's gapping up or down the way that you've pre-planned and sort of are expecting at some point, are those all things that I would imagine, but I just like to confirm that you're looking at on the day for a potential move, or to get started on a trade to give you conviction? Are you looking at things like that as well, the range?
Yeah, I mean, yeah, that definitely sort of aligns. Like, you want to have an expectation of how it will move, and then at least see to some extent that it's moving in that way. If Nvidia started chopping like $2 like it was nothing, I probably had too much risk on, and potentially, there's so you really want to. It's not so much a case of like predicting how where exactly it's going to go, what trajectory it's going to take, but more about, like, if it had gapped to 150, it would have been like, holy crap. I mean, today's probably the day, but like, I don't expect to be able to control my risk as well, so I'm going to have to size down there and potentially pyramid more later. But that's, things adjust that way. So yeah, definitely having some expectations of some description and then seeing them be met, that helps a lot.
In terms of your entry, are you trying to catch the top, or are you more interested in trying to just, confirm where the potential trade might end up? So, like, are you looking at some sort of confirmation that the stock has topped out? And how do you think about that sort of entry from your perspective?
Yeah, I basically have zero interest in picking tops anymore. Um, as I sort of said, like, I think an aggressive trader could have started in at 4 a.m. on the gap, and but they would have had to be prepared within their trade plan for an opening parabolic probably. But I think that would be pretty valid. But for me, I'm just not really interested in that anymore. The only time I'm interested in it is when it starts creating these character changes. It's been in such a strong uptrend. It pretty much goes up every day. At what point can I say this is different? Today's the day, and then put on the highly asymmetric bet?
One thing that I wanted to ask is about routine. Correct me if I'm wrong, but I would assume you might be trading from outside the US. And so, if that's true, how does your routine look in the pre-market and maybe your trade reviews at the end of the trading day? What does that all look like, assuming I'm correct?
Yeah, so I live in New Zealand, and at the moment the market opens at 1:30 a.m. and closes at 8 a.m. And then in our summer, so the US is winter, it changes to opening at 3:30 a.m. and closes at 10 a.m. So at the moment, I go to bed at 8:30 p.m. and I get up at midnight, and that gives me an hour and a half prep for pre-market. It is particularly hard to manage like the 4 a.m. sort of situations like GameStop and this Nvidia gap, because even if I want to get up early, I can't, because by the end of the trading day I'm just so tired. So I don't typically have much of a choice. I have to sleep until midnight. That's the fact of the matter. And then I do have to take it slightly easier towards the end of the day. By about like 5 a.m., 6 a.m., I'm pretty tired. Maybe not so much nowadays, but I used to make a lot of mistakes around that time. Just simple, unavoidable, like avoidable mistakes. And then, yeah, get the rest of the sleep after the market closed.
Do you think there are any benefits to trading during those hours? In sort of related to that, do you have any suggestions to traders who might be trading in your time zone or a time zone similar?
Well, it's quite hard to think of any benefits, but yeah, I mean, definitely, like I am able to keep a closer eye on how the rest of the world is behaving, and it definitely helps with things like crypto. But yeah, I'm sure that wouldn't be too hard to get those benefits in the US either if you really wanted to. The downsides are pretty obvious, sleep and all that. I don't. I mean, I'm sure other time zones are challenging, but this must be up there as one of the worst ones. And yeah, to other traders who are sort of in that night shift, I think Europe, their time zone's pretty friendly, relatively speaking. Going to bed at midnight is not too bad. But for those who are in the deep night shift trenches, like routine is just so important. Your body will actually adjust, and you'll eventually get it right. And you can do things like meal prepping, limiting caffeine intake, or at least focusing it in certain areas rather than like don't have a coffee before you try and sleep during the day, for example. Um, so yeah, routine is just so important, and to be honest, I don't find it too bad after 10 years of doing it. But it still does have its moments. Maybe the dog's barking outside or something like that, and that messes everything up.
Another topic that I wanted to discuss, if that's okay, is one that's less flattering, and it's about sort of the ups and downs of trading. I know you had a blow up in 2016, and again, a drawdown in 2022. And as unfun as it might be, to sort of relive that, I'm hoping we could do it in the context of learning and, maybe discovering what traders might be able to change about their outlook to trading to prevent those things from happening. So, could we talk a little bit about those drawdowns?
Yeah, sure, definitely. So in 2016, I was on a fairly substantial drawdown, and I, I mean, probably a lot of people by this point have heard of dries, and I did fairly well on the front side of it. I didn't lose any money, so I thought I had a pretty good handle on it. And then I made my plan. When dries failed, I was going to hit the sympathies as hard as I could. And being on a drawdown, it was quite important to get it right, and I put a fairly amount of substantial risk on the whole trade idea. So dries got hit with a regulatory halt, and so I just hit the sympathies with max buying power. Um, had my stop, which was far too big, but it was still there, and it would have borderline crippled me, but it wasn't like lose the account level. And then these sympathies just went on like a rally, and I froze. It was like, oh crap, that stop that I was risking was way too much. I don't want to lose that. And then, whoop, out goes the rest of it. Um, so I think this is pretty important to touch on, but like I was a fairly solid trader by this point. I was on a drawdown, but overall I was like at least close to consistent profitability. I'd had periods of maybe like 3 to 6 months of straight profitability, but I'd built a bunch of bad habits, and I thought that because I had experienced this painful blow up, I just wouldn't do it again. So, I happily borrowed money from my parents to refund my trading account to get over the pattern day trader rule. And the reality is that I still had all of those bad habits, and it took a lot of months of grinding out, for pennies. And I had a couple of close calls post that blow up because, at that point everything's heightened. Like you might have, say, 25,300 in the account, and you typically might, risk, I don't know, 50 or $100 a trade, and then you get some slippage, the account slips below 25k, and you're like, oh, maybe I'll just, let it ride a bit. And all of a sudden you're in the hole a few thousand, and you've got to go back to work and get that money back. And it's, it's not a good time. And yeah, literally everything is just heightened. You need to work to make money. You need to work to top up your trading account. You can't let winners ride like you ideally do. There's so many difficulties, Anyway, for me, I started making some good progress, literally grinding for pennies, but eventually did sort of get some sort of consistency back, and the crypto boom came along, and I completely crushed that, and that made me flush again. Fast forward to like 2021, 2022 drawdown, the cause was kind of similar. I had a lot of fat losses where they weren't needed. There were a lot of other degenerate type behaviors in there too. Going from A plus setups every day and increasing your size by, in some cases, nearly 2 orders of magnitude. Like, that's just not good for the mental health and the brain and all that. Like, I remember one time I'd pyramided into a massive crypto short over about a week or two. I was in the money about 3 million. And then crypto went on a tear, and I had to hit my trailing stop within 24 hours for about 500k profit. So I round tripped about 2.5 there, and my career earnings at that point were only like 10 million. So, and it was the first time I'd experienced anywhere near that size of like volatility. So it was just not healthy. And then the actual drawdown. So it lasted about 18 to 24 months. Peak to trough, it was about 3 million versus career earnings of roughly 10. So, I mean that doesn't sound terrible, but at that point, like, I'd made it, right? So if I wanted to keep risking size, I was going to be risking like the financial independence that I'd finally got, and the opportunity set had lowered dramatically. So there simply just wasn't. You couldn't afford to make mistakes the same, and I had a ton of baggage from like those emotional roller coasters that I mentioned there. I was like a gambling addict trying to go to a casino to get the cheap meal. Like, you simply can't do that. So anyway, I sized down all the accounts substantially and just started chipping away base hits. At one point in that sort of 18 to 24 month period, I was risking about $100 a trade, which is absurdly stupid when you consider, like, I had at one point a 7-figure swing, but like, that was just the mentality. I just had to get into that more grind mindset and build some consistency again. And then, of course, when I was risking $100 a trade, if I had a bad trade, like made a dumb mistake, I'd then just tilt off 5 or 20k or something like that, because I'd traded so much more size, and it was incredibly frustrating. I wouldn't say like I was depressed or anything like that, but I definitely considered retirement at that point, because why continue? It was incredibly punishing. Now, another example of like my mindset in that period, I was doing the small trading thing and making some progress, and this huge crypto setup came up. For those familiar, it was the Lunar Ponzi scheme unwind. Like, the setup was so good. Like, it was like a wet dream for short sellers. Literally a broken slot machine. Like, you just can't imagine how good the setup was. And I only had 100k in my crypto account due to the sizing down. So I smashed the setup for everything I could, traded it long and short, depending on what the tape told me, and turned the 100k account into 500k within 24 hours. And then within the next 3 days, I just gave it back trading random crap. So anyway, even though the drawdown was 18 to 24 months, due to like where the various peaks and troughs were, I actually managed to finish up 2022 and 23 in 7 figures, just from like the pure grinding and slowly, grinding it back. And slowly but surely the mental state and habits returned to where they should be. And like, yeah, there's some trading decisions in that period where I should be embarrassed about, but everyone has them, particularly if you go through a period like that. And I'm especially proud of the way that I just grinded my way out of the drawdown, without risking a blow up, without risking the financial security and things like that, and now I'm in like a much better position.
Thank you. I think that's very relatable for anybody else who's traded long enough. There's a mental sort of capital that one loses after a big drawdown. I think it's really impressive to hear how you navigated that, even sizing down a little bit, but still having success and grinding. As much as I know that was difficult and frustrating for you, I think it's still inspiring for traders to know that successful traders can go through a period like that. So I really appreciate you sharing that, and I never want to have someone sort of relive that sort of experience. So again, thank you so much for sharing that and where you were in that time period and how you navigated out of it. Another topic that I wanted to touch on, if that's okay, is about market environment. You discussed this a little bit already, but I'm curious to know if you consider market environment a lot more these days, whether we're in sort of a bull rally or identifying that we're in maybe a consolidation point or a sideways sort of action market environment at the moment. Do you consider those types of things when you're looking to put together a trade plan, or do you not care so much about that? You're just focused on the behavior of the particular stock or the theme or the sector?
Yeah, it's a fairly complicated topic, and I mean it's a bit of a landmine for newbies, right? Because they don't know what they don't know, and it's pretty hard to believe that a trading environment can last for longer than a year. But yeah, a good trader can make money in any environment pretty much, and certainly like the environment that was my drawdown that I just talked about. Like if I was trading well, I have no doubt I'd make money in that period, and as it happens, as I said, I actually did make money, but I would have performed so much better if I'd just, been in the right headspace. And even as I am now, just I would do well in that environment. I know it for sure. And I think, yes, the good traders will make money in those environments, but it does require to be performing at a high level. And that can be really demanding. And it probably comes down to the trader a little bit as well. Like, for me, most of my earnings come from a couple of the big opportunities each year with, base hits to provide the sort of stable income between that. So more important than, being good in an environment is just recognizing the role it plays, and ensuring that between those good environments, whatever they may be, that you're hitting base hits and maintaining that, like, the profit curve as you should be rather than digging a hole, which is obviously easier said than done. And I guess the other thing that's worth mentioning, and maybe this is something I have a better handle on because of how I view all of the markets, but the next good environment won't be the same as the last one. We just had AI, crypto, all that. Maybe the next one will be in commodities, or maybe the next one will be, maybe small caps will have a period where shorting them's really easy. Maybe small caps will have a period where longing them's really easy. Maybe swing trades will be really easy and day trading will get absurdly choppy for various reasons. There's so many different things that go into environment, and recognizing that can play a huge role.
I think that's a great point about especially not knowing what we don't know. And newer traders don't necessarily have that knowledge, or newer traders, if they hear about it, maybe it just rolls off their shoulders, one ear out the other. They sort of minimize the importance of a market environment. So I guess one follow-up question that I have is, what would you maybe tell a newer trader about being able to recognize a change in the market? How might they start to think about, if they hear this, that they maybe should keep something in mind, maybe a clue, a sign that the market is about to change or has changed? I know this is maybe a fairly more advanced thing to talk about.
Yeah, I guess the first thing is probably to make sure that they just don't overthink it, right? If they've found a setup that works, they've back tested it, they've got comfortable with it, they've tested it live for a while, and they're beginning to size up on it. They've found their first profitability, and you don't want to overthink that by, oh, the market environment might die out. That's not good. But probably what they can do, if instead focusing on like optimizing their strategy, they could focus on understanding why it works, like the supply demand dynamics that contribute to it. They can build robustness in their strategy that way. They can become better at it, and therefore they'll be better positioned when the market environment does shift. For example, just say hard to borrow shorts. The landscape has changed so much over the decade that I've been trading. Going back to when I was first trading them in 2015, 2014, yeah, they were easier, but if you understood why they worked, and what dynamic was contributing to it, then you're probably doing pretty well now.
Thank you so much. One other topic I wanted to discuss a little bit was trading and the relationship between trading with, especially with bigger P&Ls and money itself. What is your sort of perspective on money now that you have more financial independence compared to at the beginning or during a drawdown?
Yeah, I guess I'm a little bit lucky in the sense I've always known that money is not going to make me happy, and I've never really cared too much for material things. So the obsession with financial independence sort of has allowed me to, focus on what the real goal is, so to speak. But now that I've achieved that, I can use that financial independence to buy back my time. But that's obviously kind of ironic since I like trading and happily do it in my free time. So I guess in a weird way, nothing's changed, and at the same time, I do need to learn to adjust to the new situation. But I'm happy.
What type of thoughts go through your mind when you're up maybe 500K, a million or more? Are you thinking about maybe how much time this could buy you back if you size down or anything like that? I know you did mention that you like trading anyways, so that's going to be a main driver, that passion for it, to keep doing what you're doing. But do you ever have moments, even during a big trade, where you feel just like there's a potential to retire early or to do anything like that? In other words, does your trading profit and your P&L ever affect your trading perspective in an actual trade? Or do you just completely separate the two at this point?
I would say like it is separate to some extent, but it is all relative. I'd say like my current comfort zone is probably somewhere around 100 to 200k, and when it starts creeping into that level, the emotions do start to become present. But that at the same time, that'd also be much less than say a newbie who just made $1,000. And sometimes I really I want to trade well, so I sometimes get more annoyed about losing like 5 to 10k on a stupid mistake than a planned 50 to 100k loss. Yeah, I guess it's fair to say sizing is a gradual process, and that is what you're talking about there is potentially part of the reason why the COVID drawdown also hit me so hard, was that it went from like being a game where trying to play the game as best as I can to suddenly, I'm starting to risk, the situation I put myself in.
Don't forget to leave a like and leave a comment for something you learned in this episode. We'll be selecting a winner and sending them a t-shirt from the Trader's Journey. Thanks for tuning in, and now let's get back to this episode. As we come up towards the end of this episode, I'd love to be able to go through sort of a lightning round set of questions. Is that okay? Just pretty quick questions, pretty quick answers?
Yep, yeah, absolutely.
So the first question I have is, what would you consider your greatest strength as a trader?
I think it's to put together a large number of discretionary variables like a puzzle and then use conviction to size that idea.
Is there anything that you're working on this year or recently to improve one part of your trading?
Yes, there is actually, and I should have mentioned this when we talked about our drawdown. But since the big 2022 drawdown, and it crept into 2023 as well, I've sort of focused more on pulling back my win rate from say 65% to at the moment it's about 40, but hopefully it'll creep up a bit. But as a result, actually stabilizing my equity curve, and increasing its linearity. Having a lower win rate, it reduces the impact that mistakes have on my trading, because the win rate's already low, the losses are already small. And then in turn, sometimes the big winners are substantially bigger, at least in terms of like a risk-adjusted manner. And that's a work in progress, but it's definitely like a big focus for me. And the other thing that comes to mind is I'm slowly working on sort of merging my, I guess you'd call it like swing trading and day trading into one. My absolute dream is to have like a long swing book and then to day trade the overextensions short. Um, I mean, it's obviously a pie in the sky idea, but and it does require the right market environment. But that's sort of the general gist of where I'm slowly heading towards.
What would you consider to be maybe the best piece of trading advice that you've ever been given or at least heard?
That's a tough one. It's been a long career. More recently, two from Lance stand out. The first is from the Traders for a Cause 2020 virtual talk, where he talked about lowering his risk and actually making more money. For whatever, I'd heard it all before, but it just kind of came to me at the right, for whatever reason, where I was on my journey at that point in time, it really stuck with me a bit more and meant a lot more perhaps. And I guess the second is another one of his what he says, stay out of no man's land. I still join no man's land plenty, but that concept is really valuable for what I talked about, like lowering my win rate but having better risk adjusted winners. Um, and the other one, which this one's always stuck out to me a little bit. Trader Dante on Twitter. He I won't repeat his language, but his no BS approach to calling other people names when they make mistakes, that really sticks with me for some reason, because you know that's what it is. This is trading, and you're being an idiot. Like there's no excuses.
Is there one perspective on trading that you believe is incorrect or damaging or that you just strongly disagree with about trading itself?
The public don't exactly have any correct ideas about trading, do they? So that's a tough one. One that has plagued me a little bit is people asking me what a stock's going to do, or like if I mention, oh, I think this one will go up or whatever. I learned fairly early on in my career to just hold my tongue with that sort of thing, because I might take it for a swing trade and then stop out like the same day, or I might take it as a breakout trade and then it does a fake breakout and gets slammed the other way. And for whatever reason, people act on what you say because you're in the business. It's not good.
Are there any technical indicators that you routinely use on your charts, whether that's to figure out put together a trading plan or to potentially find an entry or an exit from a position that you use routinely?
Yeah, I try and keep it as simple as possible. I use VWAP, regular trading hours one, and pre-market inclusive. On a very rare occasion, I might look at anchored VWAP. Simple support resistance. I do use the 10, 20, and 50 simple moving averages on all time frames, but I wouldn't overanalyze how important I think they are. And I guess the other thing is like I will what's the word for it? I'll use like another chart and use that as like a character. So for example, if a stock's going up every day, I might go, okay, so after 10:30 a.m. it was never below VWAP, and then so the one day it's below VWAP, so this might be the day. So I use things like that to potentially indicate character changes.
Do you tend to use mental stops or hard stops?
I would say like 50% hard stops. Often I will use a mental stop on a certain level, but have a hard stop above it. So that might give me a little bit more wiggle room to get out, but then I'm marketing out if the hard stop gets hit. For example, I might have a hard stop, say, if I'm short above the high of day, but then have a mental stop around VWAP, and I just want to see exactly how it reacts around there.
When you look back at your trading and your career, what has been the most memorable moment, whether that's trading or something related to trading?
Two come to mind. The first was in the 2017 crypto boom, refreshing the page of an exchange, and I discovered that my crypto had gone up 10,000% in the last hour. So that was an experience, and I had to double check the calculations and make sure I was not seeing things. And then the other one was my first $1 million trade, which was longing the 20k Bitcoin breakout. The entire previous year, I'd only made 200k, so that was a hell of an experience. And it's kind of ironic because if I traded that same breakout now, I would perform much better on a risk-adjusted basis. So it's kind of funny that that's such an experience, and yet I arguably underperformed so much on it.
What does a person do to celebrate? Do you even celebrate something like being up, well over 1,000% in the last hour? How do you get up and take a walk? Or do you just keep trading? What is that experience like?
It was 10,000%, not a. Yeah, it was kind of weird. The crypto itself was a thin name. I found out later that a Japanese pump and dump group had hit it, and that was the buyer that I've been seeing on the tape. Was I guess the pump organizers, front running the move. But yeah, I just started hitting the thin book as hard as I could, and by the time I'd reduced my position by say 70%, I personally had dropped the crypto by 70%. So yeah, it was an odd experience. Granted, it was all in that was my first 100k trade. So on a absolute value wise, it wasn't huge in my journey, but at the time it was insanity.
What is the origin of your handle, Moist Mango? Where did that come from?
So about 10 years ago, I was playing a computer game and it was just computer generated, and I thought it was funny, so I kept it.
And for those who would like to learn more about you, how you trade, or possibly even contact you, how can they do so?
Twitter's definitely the best place to take a look at what I'm all about. It's moistmango12. Yeah, feel free to ask me any questions. If you've made it to this part of the interview, you're probably a pretty serious trader, so I'm pretty happy to help.
Mango, thank you so much for taking the time to speak with me today and to our audience and sharing your trading journey. I really appreciate it. It's been an absolute pleasure getting to speak with you, and I hope traders out there will listen to this and listen to it again, because I think you brought a lot of really helpful knowledge and definitely experience that you shared in this episode. So thank you so much.
Yeah, my pleasure. It's been great. Thanks again for having me on.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming episodes the moment they're published. Thanks for tuning in.